Technical Tuesdays Volume 38. Thank you guys for tuning in once again for the Astrofx team to bring you what's exactly going on in the financial markets. Now, this week is a very special week. As you guys know, we normally sit here and we talk about the currency market, but there is a much bigger elephant in the room today, which is of course the market crash that's been happening across the world. The Chinese market, the US stock market, everything is just basically free falling. People are in panic mode, investors are falling out, and everyone wants to know exactly what's going on. Of course, you guys are clever enough to tune in to Technical Tuesdays. We're going to take all of this information and relay it to you in the simplest form.
So what you guys are going to find in this video, now first of all what we're going to do is we're going to give you some facts and figures for those who are not so clued up about other world markets, because as you know we do specialize in the FX market. We're also going to give you a few causes and effects of what is actually going on. So the media are blaming China for all of the market domino effect which is happening across the world. However, there's half truths about it's not coming from China. All the economies are suffering at the moment, and it's mainly down to the Federal Reserve. So we're going to go through that, and then what we're going to do, we're going to wrap up our week, back to currencies, the euro, etc., in which we covered on our last Technical Tuesdays, and then we're going to give you a lowdown on what's ahead on the charts.
So let's kick off with the big news. Hundreds of billions have been wiped out the financial markets. Now, of course, people are saying that the Chinese market took a beating first, which again relayed that, kind of like a domino effect onto the Europe, Asia, and the US markets crashing. Now, pass it to Sean to give you some figures on exactly what's happened.
So to start with, let's talk about the US stock market. Now, the US stock market, mainly the S&P 500, let's say. We did a post about this a couple of days ago. We've been active on Twitter with these markets as well. The S&P alone is now 10% down from its recent peaks. However, some speculate it's just a correction and we're going to go higher. Others think it's the end of the world. However, we'll go into more detail about that later on. For you guys who are wondering what in fact the S&P is, it's a collection of the 500 North American stocks picked by the S&P board. So it does have a major impact, and it also gives you a great outlook on all of the major American companies. Also had a little bit of a domino effect on the Footsie 100, which, as you guys know, it's a UK market. That alone has lost 78 to 80 billion off its complete value, and it was just yesterday actually we've had so many emails, a couple calls actually, and many messages on social media, whereas people are going into these markets with no experience, not even going from currencies first, mastering a bit of technical analysis on that, and going straight into these markets, and again listening to brokers are telling you that these markets are going up, and we had a phone call yesterday, mentioned no names, whereas one of our good friends is actually long on the Footsie without a stop loss, and he's kind of in some kind of margin call situation right now, again because he listened to brokers and he wasn't careful.
Yeah, here in the UK, again, when people like to talk about trading, people like to just jump on the bandwagon, and the Footsie 100 and the Nasdaq market and even Wall Street, people like to think it's so easy to trade, and they just again get told information, they research up online, and especially when they're told all these rumors, again they just invest blindly, have no idea even about leverage or anything to do like that. And especially when a day like today happens, people have unfortunately lost their life savings.
And that was yesterday, and even today I did say, I'll probably exit this position. And even today I looked at it again, and there's a huge red candle. It's actually on my screen. I'm going to go through it later on, but yeah, I would stay away from these markets for now. A lot of people are panicking and selling even more. Some people are buying. Yeah. We just recommend you just stay back.
None of this buy low stuff to try and take advantage of this fall, or wouldn't get involved. Sit on your hands, guys.
So aside from the US markets and the Footsie falling out of the sky, the European stocks have actually suffered the worst trading day since 2011, which is quite drastic. And also China's took its worst hit. Now the Shanghai Composite is actually down 8.4, nearly 9%, and that's the biggest sell-off since 2007. However, with that being said, guys, because we're not so big on these markets, we've just gathered this information, looked at the charts, done what we could there. Despite all of the stock stocks, etc., crashing down, this hasn't really had too much of an impact on currencies. Now, as many of you guys know, follow us on social media, Twitter, etc., and even our prior videos, we have been long on the Euro USD for over 5 weeks, and many people like, no, it's going down, it's going to hell, etc. You know what we did? We used our brains, we read the price, we monitored our trade every single day. We said to each other, you know what, monitor this twice a day. If you do spot danger on a daily chart, etc., and we'll close our trade. But that didn't happen. So Euro USD.
Yeah, as I said, a lot of people are actually curious how long we've actually held the trade for as well.
Yeah.
And this isn't like, you know, we heard any of this speculation of news coming out, so we entered the euro. We've been in this trade for nearly 5 weeks.
Way back.
And this is again where we learn patience is key. Many years ago, you know, probably when we're looking at maybe 5-6 years ago when we used to trade, you know, there's no way we would have ever thought of holding a trade for so long. But like Sean said, unless, you know, we actually see any kind of bearish movement or any kind of signs that it was going to fall, we were going to stay in our trade. And, you know, again, patience was key. And, you know, again, we locked in, I think it was around about 850 pips.
Yeah, 850 pips. We could have got around 900 or so.
At one point it was close to hit 900.
yeah. So we'll go through that later on anyway, but that was very, very good. We're very, extremely happy that we actually stuck to our guns on that one, despite all of the noise. And with that being said, what happened to Greece? You know, the media is stuffing this down your throat now. First of all, it was Greece and how Greece is going down, the euro is going down, and then suddenly just things change, and it's just another episode of market manipulation overall. Every single market is manipulated. You've just got to stand back. You don't want to get sucked into all of these rumours and so on, and a panic selling, etc. Just read the price, and that's what we specialise here over here in. Really, that's what we're good at. So
I was going to say, yeah, you know, in the last few days we've heard nothing about Greece. All of this talk about the euro weakening, while as you can see, you know, 850, 900 pips later, I think the euro is doing not too bad. So yeah, that's kind of the facts and the figures of what's exactly happened. Now for you guys, we'll go into the cause, because again, a lot of people just want to know the background information on what's actually caused this, you know, kind of implode of the market. So let's go through that. So now we're going to go into a little bit about the cause of this market crash, because again, there's a lot of different speculation online. You go on Google, you're going to get tons and tons of articles with people explaining their different theories, and I think when you listen to the wrong people, you can end up you know, with your feet quite stuck in the sand. So me and Sean, we're going to go through 2 different kind of arguments about why this cause has actually happened. Just to make it easy for this video, I'll explain one and Sean will explain the other. I'm going to go through what a lot of the people, again in the newspapers, in the article, and especially in the media, are saying, which is China is to blame for everything. And they're saying this because they're saying China's bubble has finally burst. Now, some people wanted it to burst because they knew it just, again, couldn't continue any higher. Again, a bit of background information. For the last 35 years, eyes have always been on China and its incredible growth which it's had in the globe, really. And you know, China absolutely out of nowhere has become the second largest economy, very powerful, and you know, again, everyone was trying to think how much can it keep on climbing. You know, 15% of GDP figures, which is again your gross domestic product, has come out of China, and 25% of global growth. So again, it plays a big part in the whole world. And you know, this has actually caused, you know, stock prices to just basically pump high as possible. The government and so many other places, so many other parts and components in China has led to the price being pumped. I think for roughly the last year and a half, the price has been going higher and higher, and it was bound to blow. And you know, with this bubble again nearly about to blow, I think in July we had some figures where it was low export rates, we had factory orders were down, even the property market was struggling.
And they devalued the currency just a few weeks ago as well.
Yeah, again, there's so much information, and everyone just said it came at kind of the same time. So this bubble that was growing higher and bigger for China has finally kind of exploded. And one thing that you kind of want to know as well is that in China, most of the investors are individuals. So one of the reasons for this market to crash is these investors are clever. They're taking their money out of the market and leaving everyone else to panic, which are already quite a lot down.
Yes, guys, major profit taking going on right now. Right, the other side of the story, which you won't really see in the media and so on, is the Federal Reserve. Now, the Federal Reserve, for you people who do not know, these are the guys who dictate all the monetary policy and interest rates, so on, for most of the countries around the world, to be honest. Federal Reserve, I'm going to show you a timeline shortly when we get onto the charts, but the Federal Reserve are actually the organization ahead of the US government. People do still believe that money comes from the government. They need to go and do the research because things are about to get heated up, and the stock market is going to get heated up right now. No, I'm joking. All currencies are in fact pegged to the US dollar. Now, the dollar used to be pegged to gold, however, 1970s, that all changed. So the Federal Reserve has dominion on over all of these currencies worldwide. Now, the media, as Natch has gone through, are blaming the recent crash on China. However, the US markets, UK and European markets are also crashing. Why? Due to the recent Fed claims. What are the recent Fed claims? So, the Federal Reserve actually came out with they are going to rise the interest rates. Now, we know Bank of England are going to do that soon. However, we've heard this rumour before. But yeah, the interest rates from the Federal Reserve are going to go up. Why is that significant? That is significant because the Federal Reserve interest rate has in fact been stagnant and the same since around 2005, 2006 off the top of my head. I'm not wanting to go deep into economics, we're just giving you some facts and figures here. So 2006, and many analysts around the world are actually rushing for a rate hike for the Federal Reserve to come out and bump those interest rates right up. What's wrong with that is because the Federal Reserve have launched so many rounds of, they've done 3 rounds of quantitative easing, where they're basically pumping money into the economy and diluting the purchasing power of the dollar. Again, I'll show you that soon. So forget the 500 pip move, forget the 600 pip moves. If the Federal Reserve does come out and raise these interest rates due to the massive imbalance in the bubble that the Fed have caused on the US dollar, the market is going to fall. I'm talking 1,000, 1,500 in the matter of probably seconds or so. So with that being said, this actual, this small profit taking event and so on, we actually think that there's a much bigger picture at play. This is getting people selling like crazy. People are buying. People are losing their minds. People are losing their homes, their wives, their children, etc. But what do we actually think about this? What's the conclusion from us guys?
I know, again, a lot of people again are just buying into this whole Fed interest, and again, that's what's making the market, quite volatile. It's been the same in the past many times. If you go back in history, you look at the same effect, that the same problem has time and time again. And again, we probably would fall in that trap. But again, from being in this market for numerous years, again, we just straight up, we think it's a lie. We think it's a bluff. We think the Fed not at one point actually planned to go ahead with the interest rate.
Yeah, so what do we think they're actually going to do now? Due to the currencies on its last legs, the US dollar, with that being said, we actually think that they may come out with, I think it's the 15th and 16th of September, which is going to be a big date, and even the 23rd as well. Remember the 23rd. But yeah, the Federal Reserve, they're either going to raise the interest rates, which will push the markets even lower. However, I think they're going to try and kick the can down the road a little bit more and launch QE4 perhaps. Now that's just something to think about. We can read the future sometimes on the charts, but we're not always right. Don't take everything we're saying as gospel. We're just filling you guys in with our thoughts surrounding these markets. Yeah, so if they do launch QE, the dollar's going to lose a lot of strength. The euro is going to go to the moon. Sterling's going to go to the moon against the dollar. We're currently watching gold. We'll get into that soon. But yeah, kick the can down the road, and these markets may return and make new highs. And then kicking that can down the road even further, if the interest rate does change sometime next year, that's when we're going to see the official burnout. Now, we've seen this on currencies as well, even last year on the pound, when it bounced off 1.7, we said, yeah, here's the breakout. However, it was just a rumour that the Bank of England are putting interest rates up, and that forced the currency new highs, and then it crashed, 3,000 pips. So time and time again, markets are the same.
That's right. And again, guys, this is just all the information we've just given is just a summary of what's going on. We don't sit here and spend 9 hours a day researching this information. It's just, as a trader, it's a part of your job role to keep everything in mind. But hopefully this video has helped, because again, we've been pestered with emails about what's going on and what can we do about it. So what do we always do? What do we call this episode? It's called Technical Tuesday, and everything that we've always done is kept our head within the charts, and again, placed our trades using our charts, not off what we hear of he say, she say. So we're going to go back to the charts. We're going to go into gold first, right, Sean?
Yeah, we're going to go over gold because with all of this crazy stuff going on, which is all an illusion anyway. Gold hasn't even moved. Now, gold is technically bearish still, and why is gold bearish with all of this crazy stuff going on? Is because as the dollar devalues time and time again and loses its purchasing power, investors are looking for the gold price. Even the gold market's manipulated. They want the gold price a little bit lower. So maybe when the Fed does put interest rates up, then boom, this is going to happen. So
yeah,
we're
you've
going
got
to
to think when the gold is this low, if you do your research, you've got the elite amongst the world buying gold, and I don't mean buying little blocks. I mean buying 500,000-600,000 blocks of gold. And if they are buying this now, you can imagine it's again a waiting game for gold to actually do the continuous run.
Because gold's always been the real currency of the earth and always will be. So that's how to preserve your purchasing power through gold. However, we're going to get onto the charts. We're going to look at gold, we're going to look at oil, I'm going to show you a few things about the US dollar as well, and run over some of these markets. And most importantly, give you a lowdown on the Euro USD and just some major currency pairs in general as well.
It's going to be a good Technical Tuesday. Now let's get to the charts.
Well guys, right, let's get straight to it now on this one. A little bit different. As you can see here, we've got the Footsie 100 index, which I'm going to run over, give you my viewpoint on and so on, if it's any value to you guys who are trading that market. But first of all, let's go into a little bit of history. Now, going back to something that isn't really taught in schools, many universities, etc., is the monetary system and where your money is actually coming from, and it's not just come out of nowhere. So, as you can see, right in front of me now on this screen, we have a timeline of the Federal Reserve. Federal Reserve, as I've already mentioned, dictate all global monetary policies, and you've also got the group of the G20 as well, which is basically a group of all the elitists, everybody, all the central bankers and so on, who congregate together, and I don't even know what they do, but it's not really beneficial to the everyday person. So, purchasing power of the US dollar from 1913 to 2013. We're now in 2015, obviously, but let me just run over it. So, 1913, the Federal Reserve is created. You can go and research this stuff online. I know people have wrote books about this information and so on. When the Federal Reserve was created, all of the money, even with all the central banks like Bank of England, etc., all the money that was printed into circulation could only be printed at a viable rate to how much gold they had in a reserve. That's right, physical gold. We did in fact have some turbulent times in 1929 and 1931, whereas the US, that was the first, it's called the Great Depression. You can go back and research that too. This point as well, guys, the foreign exchange market was non-existent. So when that stock market crashed and so on, there wasn't enough money to go around and stimulate the economy so people could go and work and so on. So what happened? They removed half of the gold standard away from the physical notes. What that allowed the central banks to do was, in fact, to print more money on demand to throw in the economy, etc., stimulate it in order for people to now get back on the feet. And that was right here, as you can see. So after that, we had a few wars and whatnot, World War I, World War II. Then we also had, let's go down here a little bit, World War I, World War II. More and more money was being printed in circulation. That's why the US dollar lost its purchasing power and so on. And then we went to the 1970s. Now, 1970s is an important spot in history, whereas President Nixon actually removed the full gold standard away and took all of the physical gold and silver, etc., out of the coins we use, and then gave the Federal Reserve the power to print money on demand. Now, even if you look at one of the US dollars, it doesn't say from the US government, it actually says Federal Reserve note. Now, with that being said, the physical gold bullion and the coins was now removed, and then all of the other world currencies were now pegged to the US dollar. That's why the US dollar is the main, the foreign exchange market is a dollar-based market for one, and that's why some stuff like non-farm payroll is only measured against the US economy, because looking back in history, there's a lot more to it. I'm just giving you a brief timeline. However, you can see right here when that did actually happen, the dollar's purchasing power just went downhill. Why? It's because when you have, let's say you got a glass of Coke and you're just pouring water into this glass of Coke, eventually that's going to dilute itself and just turn into water. Now that's what's happened with the monetary system overall. The money supply has been it's gone all over the place, and the purchasing power of that note is no longer worth anything. So look at 2013, after 2008, sorry, when some of the banks went down who were too big to fail and needed that stimulation once more, when they should have gone bankrupt. More and more notes into circulation, then with the Federal Reserve launching QE 1, 2 and 3, so much money's in the economy, just diluting it. So right now we're in a great time in history, whereas something major is about to occur, and we're just sitting on the back burner here now, reading the foreign exchange market, because the forex market is always going to be the forex market. That's why we don't really get actively involved in stocks and so on, because a lot of that is even more manipulated than FX. But just looking at this timeline here, we are the US dollar alone has lost 98% of its purchasing power overall, and this is the reason why these central bankers, why these rich people, why the elite guys are all putting the money into gold, because gold has always held its value, whereas the paper notes have just gone down. Now this isn't just the US dollar, by the way, this is also for some of the major world currencies, Singapore, China, etc. They're all launching quantitative easing because all the economies are in a bubble. Now it's quite crazy to think, whereas people say, oh, this country's in debt, this country's in debt. Well, who are all these countries in debt to? It's quite a mystery. We personally over at Astrofx think that the whole economy is very, very manipulated, and there is an end goal and so on which these guys are working towards, which it isn't really in our interest. However, if you learn off your own back the history, if you look further back into history, you will see that history does repeat itself over and over again, and where the safe haven does in fact lie. So that's just a little bit of information and background on the US dollar. And as I mentioned, if they do push forward next month with quantitative easing 4, this chart is going to be riding even lower and lower and lower. We're talking 99% of the purchasing power has just gone from the US dollar. Now this is known as inflation. What is inflation? Is when the purchasing power of a reserves currency is just falling off the edge of a cliff. And it doesn't really impact on, okay, I can rip the half of this note off, quarter of this note off, and so on. It actually impacts and reflects in the price of goods like chocolate bars and mortgages and etc, etc, etc. So what does that mean? The average middle class person on a monthly wage, etc, is going to get squeezed till they can't really afford to do much more, and they're working their ass off somewhere else. So guys, you need to really educate yourselves on the monetary system. We're not taught any of this anywhere else, but Astrofx, we're here giving you market breakdowns for free once again, educating you on what's going on, telling you not to listen to the news, don't listen to them, they're all liars, and so on. So let's just get straight stuck into the charts. Now I'm going to start on gold, yeah. Now gold, we did make new lows here. My gold monthly chart, I'm looking at this and I know gold does in fact have to come a little bit low. I'm using technicals as well to project maybe 800 750s as a great buy point for XAU USD. However, now there's nothing telling me to buy. I know my buy setup, it's right in front of me and I've got it in my head. We're still making lower highs for now, alright? So I'm just waiting for this to dip a little bit lower. So this is, gold is my indication of my economic indication of what's about to occur. So this does in fact need to roll a little bit lower. When we do get to around these levels, perhaps it might never happen. I am just I'm just speculating on what I think is going to occur with gold and in the world's economy. But once gold is at that levels, then it's time to panic. Then it's time to think, okay, what's actually going to go on here in the world, and there's going to be some crazy changes and so forth. But again, we're going to keep you updated with that too. So gold a little bit lower, nothing substantial yet. As you can see here, we're just at this major level of resistance at the moment, and we're just waiting for this to turn around. It could in fact shoot straight through this trend line. However, I've got my major levels of resistance just above. As long as we're below 1200, I think we're cool for now. So this is my indication of all of these fake moves that potentially are happening in other world markets as well. Now Footsie, really quick. I don't want to go on for ages about these markets because it's not really something that I specialize in. However, as you can see, we've fallen from these highs. Yesterday's candle, horrific. Today's candle, horrific. We're currently floating around 35% of what it actually put in, the bottom it put in today. Depending on today's close, we could in fact just be ready to go a little bit higher. We come near to the Fibonacci here. Now, if Federal Reserve, quantitative easing, etc., we could sky high all the way up here, where many people have just lost money from their longs, pulling out in panic, just getting destroyed in general. And now it's going to go back up and make even new all-time highs. So that's that market. Let me just go over to the SPX quickly. Okay, so this one, what I think about this one is that as long as we sustain above this level here, we could in fact rally all the way back up. I don't trade this market, I hardly look at this market. I'm just giving you guys an indication of what's about to occur. So with that being said as well, if we go over to the US dollar index, okay, US dollar index right here, we're on this support level. Now if you look at the weekly candle, it's a current doji, bullish engulfing on the daily, and we're still in bullish territory. So this thing could maybe go for one more rally before the US dollar does collapse. But all of this, I think, is just nonsense, literally just nonsense. We're not even in September yet, and if you go study history as well, the majority of market crashes and in 2008 are always in September. As I said, September the 23rd is going to be an iconic moment for the US, especially in New York as well, so bear that in mind. So that's all of that nonsense out of the way. Let's just get straight into the currencies now. If you guys, we didn't do Technical Tuesdays last week, but however the week before we did cover a few currency pairs. Now Aussie dollar, again I've got my analysis still drawn on 0.7 next anticipated target zone, and the low was in fact around 0.7030-ish. We took profit on this trade. Okay, we did break it down as to this fourth break of the trend line could in fact be a false break. And we did tell you guys on Twitter, Instagram and so on, because we love posting charts, that we need a close below and a crossover back to the downside for this to go short and hit this target. And I did also mention that 0.7 for Aussie dollar is an important target, and an important monthly key level as well, where we may see some reversal soon. I'm not calling anything on the Aussie at the moment because I have to wait for the price action to bring that trade set up to me. However, we could see a reversal. The weekly close is in fact going to be interesting, and tomorrow as well, the Wednesday, we could see some more activity in these stock markets and so on. I'm actually staying away from all markets now. We're not in any positions whatsoever. I'm going to go over to what we have been in a moment, but Aussie was one of them. We're very, very proud to say, even from up here, we were saying 0.7 is going to be achieved. It took a while, however, it was hit, and as you can see here, we stuck to our guns. We read the price. There was nothing telling us there was bullish momentum as of yet. The only bullish setup we did in fact go over was a potential rebound to hit here, the monthly resistance, before going even lower. That was it. So I hope you guys enjoyed the analysis on AUD USD. We're stood back now. We're waiting for price to confirm which way it's going to go next. Next one, GBP USD. Now GBP USD is an interesting one. This one, it's funny. This was non-farm payroll. We came up, broke this counter trend line here, MA crossover. This was a very, 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 very stubborn region for the GBP USD, 1.5700. We did in fact say a close above that. We can in fact anticipate a long. We made highs at 5.814, 5.815, and today it's a bit indecisive. We've got a current bearish engulfing formation. However, the candle hasn't finished yet, and we popped our head above here, made a new high for the week. Potentially right now, reading this price on the daily, we could in fact just break and melt down here. Now, two scenarios on pound. I'm not getting involved with this at the moment. One scenario is that we break this counter trend line and we break all the way lower, we break through the monthly support, and then we make new lows around here, or we recover, we spike all the way back up and go all the way up to 1.6100. It's all going to depend on what's going to happen tomorrow in these other world markets and so on. But technically on this right now, it is retesting the support, which was a huge area of resistance. So it could just be a small retest before going higher. However, I wouldn't need to wait, and before you go long on this, you're going to have to wait for a break and close above 1.5762. So just bear that in mind, okay? Weekly is looking quite bullish. Monthly too. However, the weekly candle right now actually is not even looking too bullish anymore. A huge spike. So maybe we can follow that back up and close above on the weekly. I'm just going to wait for a daily close above that key level. Now, next one is Euro USD. Very, very happy with the way this played out. We're very, very patient. It's probably the most patient we've ever been on an individual currency trade. But we had the Fibonacci A, B, C, and we've had this drawn on. You can go back through our past Technical Tuesdays and past posts where we're putting these posts out. We're telling people why we think it's going to do this, that, the other. Many people who are brainwashed by the media and listening to all of these Bloombergs and whatnot saying, no, Euro's going here. However, too many people out there like to try and trade off what they think and what other people think rather than what they're actually seeing and reading on the chart. So what me and Nat did, we stood back. We awaited price to tell us, okay, now this is bearish, which didn't happen. And we've also used, alongside many of our students who have also utilized the members zone, the videos on there, we've utilized the rules of our price action techniques and strategies to put many confluences in place which told us that Euro USD is not going down. Now this comes from many years experience of knowing the bigger picture in the world and not listening to the news and all of that crap. And the proof is right here. As you can see, we came all the way back up. We put multiple time frames into consideration, monthly, weekly, daily, patient for a good few months. And as you can see, our Fibonacci target, I've had these drawn on 1.1700, and as you can see here, if you can just see that, we've pinned just like a pip or so below the Fibonacci D target. Now where is your USD going right now? People are saying sell, buy, sell, buy. Some people just need to chill out. Alright, what I think of Euro USD right now is because that Fibonacci is fulfilled. So what do I do when a Fibonacci is fulfilled? I add another Fibonacci. So I'm just going to tell you, I'm going to show you. Okay, so here, current levels to watch Euro USD on 1.1380, 1.1280, and then finally 1.1177. These can be retracement levels. We could see a major boost through this key level again, but let me just show you what. And I remember going through this with a couple students. There would have been so much volume in terms of stop losses and orders above this key level here from people going short. Now look what it's done. The amount of volume and the sudden boost through that major key resistance ensured that these stop losses are being hit. If this does now reverse to the downside, okay, this could make new lows. I'm not sure yet. I need to just wait until price action does, in fact, display that to me straight directly on the charts. It could make new lows while the dollar goes high until the Federal Reserve, you know, launched the QE and so on. But what's happened here is that the euro has popped all the way up, hit those stops, and it could go down. However, I've gave you those Fibonacci levels right there for a rebound back to the upside. If all of these are broken, I'm going to stay away from this a bit. I'm staying away from this market now until further confirmation, especially on the weekly chart as well, because on this weekly chart, let me just remove some of these fibs. On the weekly chart right now, we can see the weekly candle isn't looking too nice. Spike all the way up. It's all going to depend on the weekly close. If you get a weekly close below that, we can maybe consider an overall a bearish reversal all the way back down here to take out new lows. It's just it's just trying to confuse people. However, if you know how the market works, you can stay on top of this and read it. It's quite simple. Any other markets to consider right now? Some of the yen pairs fell off the face of the earth. Let me just catch up on UJ. Last time I analysed UJ, I did in fact say and suggest to people, if we do get a daily break above this weekly resistance here, we can go long and expect a new high. However, we didn't get that. And what we did in fact have is a reversal bearish engulfing from that, a crossover, and we fell over 900 pips. But look again how accurately that came to one of the key levels. So it's all about getting those key levels right and so on. So that's all for the analysis right now. However, one more thing, guys. One last thing. Oil. Quick one on oil. In the past, time and time again, when oil's declined at such a rapid rate, a stock market crash has usually happened after. Oil overall, if this was a legitimate oil crash, the price of petrol would have halved or something. but it hasn't. So this is going to rebound as well, just like gold, because as we run out of oil on the planet, the demand gets higher and higher, which means the price will go up. So watch oil. It is a great indicator of world economics and so on as well. So I hope you enjoyed today's Technical Tuesdays. I hope you took something of value from it. Please leave a comment below and let us know what you thought of the analysis. And congrats to everybody who made some money on the euro alongside us. So we'll see you again next week.